Hello and welcome to the Wednesday check-in brought to you by David Gockstein. I'm your host Landy and today is June 17th, 2026. And we're looking at Bitcoin here on the weekly to start. And we will move down to the daily and we're going to go check on traditional markets and oil. But first, I wanted to pull up something that I don't often show here. I used to show a lot, but I have on the weekly the visual range volume profile on the right hand side of the screen here. And it's just your aggregate buy and sell volume at a particular price. And I wanted to point out kind of where we are now. And this is going to adjust, but as you see this adjust to like last cycle, one of the things that you're going to notice is that Bitcoin is spiking into a pretty high volume area of of buys and sells. Excuse my voice. Up at this peak here on the weekly high, just shy of $68,000 here at 67.3 or so. What did it end up getting to? 67,260 on index. So not abnormal to see a sell off. Also, we had FOMC today. The little bit of a rally into it in lower term timeframes sold off pretty quickly, right into one of the main zones that I talked about on Monday, between 62.5 and 65. That's the area that the bulls want to see hold up on the daily. And bulls wanted to see and want to see closes back above 65 to have a chance for 68 to 70 in the near term on this particular move, or risk falling further to that 62.5 area at the range, the tighter range lows before getting to the actual lows. If that's lost, then we're looking for the lows, right? There's nothing here saying that this structure right here is macro bottom in. So I vehemently disagree with those that are out there positing that idea. That doesn't mean that it can't become a macro low area of interest. But I've shown you many times what my thoughts are on that in these various videos. You can go back even to Monday. But I'm seeing that noise get louder and louder and louder from, some pretty high profile accounts on X in particular. And there's nothing here that says that this is a macro low in. This is a fresh trend break to the downside off of some local higher low, higher high structure that was a retest of, a big monthly area, right? So, and I've shown this probably too many times to count at this point, but big monthly closing area retest. Closes anything like this in the next 13 days and 1 hour. Excuse me. And this would be, a lower high, lower low. Lower low, lower high structure. So, it would technically confirm not just the trend break, but the trend reversal. That doesn't mean that price has to do what it did every cycle, although you're going to hear that, there are targets for lower in this cycle. Very similar in terms of size of the move to the downside that we've seen in prior cycles. And in fact, there is some precedent for that. There's off of the initial move down over here, we hit a two spot fib on I was looking between, 15 and 16 $1,000. We hit 15 and a half or so, right? And that was just off of the first move down on an extension. So, that's nothing too crazy. In this case, this is a fib on log scale. This is a log scale chart, as you can see over here. So, and it was based on breaking down from 18 and a half and losing the low at 17, 17 and a half, 17.7, right? Then I was looking to the next area, down below there. We closed right on the 1888 here, and then the next area down below there was the two spot, and that was generally where I was looking between that and a fib extension and a whole bunch of other stuff at the time. If we were going to see a similar move down to what we saw last cycle, which from a technical point of view, there's people that are looking much deeper in terms of moves down for Bitcoin and the macro time frames than I am. But in reality, a two spot puts things right back at 28K. You've got 1888 there at 31, 1786 on the breakout, and kind of no man's land in my opinion, but right around this swing low in the lower 33s to this monthly, which is actually a $35,000 close right over here at this monthly close open. But realistically, the reason why I'm bringing up the visible range volume profile is because, you know, where has the most recent, meaning on this move up prior, where did we see most of the volume come in? You know, the biggest peak that we saw was coming off of the, if we were just going to take this move off of the lows and let it adjust here, you'll see that the biggest peaks, of course, are all the way down here, and there's larger gaps between 31 and 34.5 up to 38.5. Again, close open right here. And then out of this local zone, you know, it's right at a gap to the downside for this move up, right? So a gap to the downside puts things in the lower 40s, right? 42, which is this close open just prior to, or just prior to, and then after the ETF launches. So why am I bringing that up? Because it's very important that if the bulls are going to hold up in this range here, that that they only just swing it and close back inside of it on something like a weekly time frame, right? So that's where if we turn on the levels that of interest that I pointed out here, that that we see this area, even if we dip down into like the mid 50s, into some of the structure over here, that that we see it hold up and get bought back up above the lows here at minimum this low. And then, of course, this is a monthly right here at right around the upper $58,000 region, almost 59K. On some charts, it is $58,000, almost exact. But you'd want to see it basically bought back into the lows of this range and then work its way up. Now, from the weekly standpoint, I mentioned earlier this week, this is a trend break to the downside. We have, you know, the potential to close low here, but it's a move still in progress. Let's go ahead and turn off the VPVR. And let's go ahead and dig into this a little bit with some bands and as it relates to some of these levels on the weekly. This is a lower second standard deviation. I was looking 58 to 60. That was lining up with the lower second standard deviation area, right? We did get on the initial push down to 60, we got a little bit of an overshoot into the upper $50,000 region. But then as Bitcoin mean reverted back to the upside here, we got this band closing in. So this is a compression awaiting, you know, still a bearish setup. I'd want to see this, if this is going to turn out to be an area that develops into a low, I'd want to see, you know, into a macro low, which it's not right now. It's not even a candidate at this particular moment. You'd want to see something like a quick dip down and then a compression that kind of results in a structure change locally. We don't have that here. That's not what we're looking at. Band setup is bearish. You need to see the lows hold. Need to see a nice bounce, maybe even to a lower high, dip in for some liquidity, and then start working its way through the levels, in my personal opinion. When looking at the daily, I have some 4-hour stuff on the chart here, but don't worry about that at the moment. What did I just do? All right, so let's zoom in here to the levels as it relates to the bands on the daily here. So we do have higher low, higher high structure on the daily here. And, you know, what you want to see for this move's integrity is you want to see closes remaining above $65,000. That, you know, is still in the cards if it can put in a higher low in this zone, 62.5 to 65. Then back above 65, just beating the highs and then going up for 68 and potentially 70. Although the bands are setting up for a bearish area of interest, being more like 68 to 69K. If we do see 62.5 dropped, especially on closes, if we haven't already tested down to this low by the lower first at 61,480, 61.5, I would expect that. And of course, that would be endangering higher low structure, by the close, and then if it drops the swing there at 60,730 or so, 750, then I'd be looking for the lows to be fully back in play, even in lower term time frames. Lows back in play, 58 to 60. You can see 57.5 on the daily lower second standard deviation. This was a mean reversion play to the basis band or 20 simple. Anywhere below there, we're looking for the mid 50s, 54 to 56 on the top side here, these weeklies, and then potentially down to, 52.5, 53.5 on the low side by that lower third on any extension into that area. And then we have to entertain 48,000 to 50,000 and potentially more down towards the monthly at 45.5, 42 below there, so on and so forth. But we're not there yet. We saw, FOMC price action reaction in the markets after the decision for rates, and then the subsequent discussion and the talking points that Warsh came out with. And look, I mentioned that I didn't think he was going to raise or cut. I don't think that there is. I really am not of the opinion that there's any reason to raise right now, especially if we start looking over to oil. They're going to be watching that closely, and they're going to be watching core metrics. And core metrics month over month ticked down coming into this meeting, so by 0.1% for core CPI. So month over month came down 0.1%. If we continue to see lower oil prices, we'll see CPI come down month over month as well into the subsequent meetings. If it stays down low, then we'll see that start being reflected in core metrics over time, probably more towards the fall. So I don't really see a scenario in which they would have to raise rates, but we'll just keep a close eye on it. And I think a lot of it is going to depend on oil prices. So for oil prices, obviously, I've mentioned this before in various places, including here. What the administration, what the Fed, and what just about everybody wants to see is oil prices $75 and under. And what do you know? We came down through the red zone here. We actually dipped right into $75 and under to 74, 74 to 76 on the low here. The big area to pay attention to the downside is anywhere between around 68 and 71 or 68 and 72, depending on what you're looking for on this move. But be aware, if we start to see this closing back above 76 to 77 on the downside of this red area and then back above 79 to 80, we could very quickly see 83 to around 85, and then subsequently looking for mean reversion potentially all the way back up to the 88 to 90 region over here. So just watch that carefully. I know there's a lot of people making a big deal about this MOU. Look, a memorandum of understanding is not a peace treaty. So you keep your head on a swivel, because one of the things that has been very heavily indicated by the administration is no matter what happens with this memorandum of understanding, if it is violated in any way, that they would resume strikes on Iran. So I know that there's people out there that think that that's completely impossible. Everything's done. They're touting it. Well, yeah, you wouldn't keep the military in that region and have them fully rearmed just to walk away during this particular time period in which they are going to essentially, it's like a ceasefire that has actually been agreed to and signed. That's what a memorandum of understanding is. And there's apparently different incentive structures built into that particular memorandum of understanding, that if they are hit all the way through to the end, then apparently the other Gulf states, the GCC, would start making agreements and arrangements to potentially help rebuild infrastructure. All of that is very much unclear, and I wouldn't trust any of it until you see the process get rolling and checkpoints being met, and the agreement for the memorandum of understanding actually working out, because that's, you can equate it to something of a ceasefire in writing more than any kind of peace deal. And then I don't think anything's resolved until we actually see some sort of a peace deal. I don't care which side of the aisle you fall on. You should just be aware of messaging from all sides, take it with a grain of salt, and more importantly, watch what's actually happening in markets, and if you're interested in taking deep dives into stuff like oil and energy markets, there's many ways that you can validate what's happening, shipping manifests, and where ships are and where they're going and who's going what and where and why and when. There's really good accounts on X to follow that stuff for. All right. For traditional markets, this is a bit of what I talked about. And I mentioned if we don't see continuation past the high, beware of a lower high. We got a lower high. Now, granted, we got a buyback post-market into the gap fill area for SPY. I'm only going to concentrate on SPY. This is going to be a shorter video. I'll go deeper in depth on this stuff on Friday during the live stream, which is going to be at 8 p.m. Eastern Standard Time. I'll take a look at NASDAQ and Dow and stuff like that. And if there is requests in the chat, I'll take them. But realistically, this is lower low, lower high structure. So this is a trend break, right, to trend reversal setup. But as we've been expanding up towards this high side structure, if things start chopping around here, what we'll see is the daily start to compress. And typically when we see compressions, we can still see, trend breaks like this on the daily, confirmation of any kind of a breakdown below here, obviously below the lows around the 720 to 725 areas, which you need to be aware of on the extremes to the downside. And then it's 755 to look back to 760, and you'd need to see that break for continuation higher, right? But realistically, what we could see is this is setting up in a range now, and we can see things bounce extremely hard between the bands here in this range. And all I got to do is point you back to this, right? You get a trend break, you get the lower high, it stalls out, gaps up, comes back, makes some new highs, big correction to a trend break, lower high, lower low, marches its way back up, higher high, higher low, compression. The compression persists for a couple of weeks and then dump off. And that might be, I'm not saying that it is, but that might be what we're looking at here on the daily for SPY. And I will say that the setup here is to try for higher low structure as it relates to this last low at 722. That is the bias, is that we're very highly likely going to see a higher low there, but it's not a confirmed bias. In fact, if it gets dropped, I'm looking for not just the 720 to 725 here. I'm looking for 715 to the 710 region over here. If we start seeing that dropped, we're looking, essentially under 710 to 705 and then back to 700 points around the highs here. All right. You got 697 to 700 there. You do not want to see the quarterly closing anywhere near there, and I'm going to show you why. So let's go ahead and get this chart up here. You do not want to see the close of the quarterly close inside of this swing right here. That's 697 to 700. You don't want to see it. That'd be ugly, even if it was a green candle, and would look like we would be more apt to see some downside price action back to, the 630s, gap fills all the way, and it would not look good at all. This kind of structure, you want to see closing here or above, right? You want to see it closing above this upper second around 738 to 740 by the end of the month, which is the end of the quarter, which for SPY is going to be in 12 days, 21 hours. So that's all I got for you today. I hope that you like and share this out there if you did find it informative and helpful. And I'll be back here on Friday live stream. I believe I have some guests lined up, but if I don't, I'm still going to do a live stream. There's a lot of stuff going on. People got lives that they're living. So sometimes, if they can't make it, that's okay. I'm still going to do a live stream. I do like interacting with the audience. Something that I used to do a lot in other venues, but Fridays are going to be live streams no matter what, whether it's just me or whether I have guests. Hopefully I'll have some guests on Friday, and you can look forward to that at 8:30 p.m. Eastern Standard Time, 5 p.m. Pacific Standard Time. And I appreciate you all. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe and watch that 4-hour structure here. We got the 4-hour highs cutting across here. You want to see that reclaimed, and then 65 reclaimed, and then those lows up there. Those lows. Need to see those lows reclaimed to have a shot at the highs and potentially up to 68 to 70. All right. Take care. Landy out.